Erste generally bucks the trend in terms of revenue among European banks, and so that's something, I suppose, for you to celebrate. But give us an update on costs, because net interest income momentum and margin pressure, are there any sort of any signs of improvement there? Let's talk about net interest income first.
No, there are no signs of improvement there. We are lucky because we have quite a strong growing business in countries where we still have positive interest rates. So we are in the fortunate situation that we can still grow our net interest income, which in the Eurozone is rather difficult.
Yeah, absolutely. And certainly with the low interest rate environment and negative rates, are you finding at the moment that we are close to the reversal rate in Europe, where the positive impact of negative rates is no longer outweighing the negative impact for banks?
I don't really saw the moment when was the positive impact of negative rates. I think it's overall for our business, it's not a good thing. But we're getting paid for living with it, so I think we've got pretty good use to it. We manage it rather well. It's unpleasant for our clients. They put a lot of money into our bank. Our deposits grew by over 6%, and we don't pay them anything. Makes you feel bad. So in the euro currency to develop nicer margins over the next years, forget it. It's not going to happen.
Forget it, not going to happen. Okay, so how satisfied are you with your cost position at the bank? Do you expect any major cost initiatives in 2020?
Cost initiatives are things that you should do and not talk about. I find that utterly boring. Next year I'm going to cut my costs like that.
Right.
Just go ahead and do it and show it that you're able to manage your cost-income ratio, which is extremely important because at the same time we have to invest a lot. We have to invest a lot in tech. We've got to invest a lot in AI. We've got to invest a lot in good people. Because we still need them, and we have to divest in bad things and do that very quickly. That's the only way you can manage your costs. But don't talk about it, just do it.
Okay, well, in terms of investments then that are planned for your digital retail platform, George, in 2020, what returns can you expect from that investment?
George is the platform basically in the way that we have built a fintech in our own house. So it's very difficult for us to actually say how much money did we make on George, because we're making money on the way we serve our clients, and the digital channel is just one and a more and more prominent way on how we serve our client. What we know is that our client base is growing constantly. We're gaining market share all across the region, and I would guess that most of that is due to the fact that in addition to very good people, we have an extremely good digital platform.
Right, and speaking of clients then, I want to ask about your corporate customers. What are they telling you about the outlook in the CEE region in terms of how significant the downturn is?
Well, the downturn is not as strong in Central and Eastern Europe as in other countries. As you see, we outgrow most of the European markets. GDP growth in our countries is 3%, and it's still pretty positive next year. I guess one of the reasons, or maybe the main reason for that, is very simply that our countries are not as developed in their social welfare system as Western Europe is. So it's just a lot more flexible. The region offers still a lot better opportunities for entrepreneurs than most of the Western European countries, and we benefit from it.
Oh, interesting. Now, I want to talk as well about your CET1 ratio, because you've said previously that any higher dividend or share buyback will only be an option if CET1 exceeds 14%. Bloomberg Intelligence has said that may happen in 2021. Is that still a position you hold to in terms of capital returns based on CET1?
Very much so, yeah. We are, if you include the third quarter profits, we are at 13.5% for the moment, so we're relatively close to the 14%. Our capital generation capacity is still pretty good, so we're going to get there. And we see absolutely zero reason why we should go above 14%. Even 14%, I think it already is really high enough. There is no need for more capital.
Right. So why not return capital to shareholders where you stand right now?
Absolutely. That's what we'd like to do.
Right. Okay. I mean, would you announce anything any point soon, given that you've just said that actually is a very comfortable CET1?
Same thing about costs. Don't talk about it in advance. Do it. If you have excess capital, give it back to the shareholders, but don't make long-term announcements about it.
Yeah, I like it. So just do it. Just just do it on capital returns, just do it on costs. Now, in terms of, let's talk about just doing it and the ECB and policy from here. What are you expecting from Christine Lagarde when she takes the helm? Are you worried that we're going to continue to see lower rates in Europe, and how will you offset that, if so?
I have high hopes in Christine Lagarde. She's a wonderful lady, a very skilled politician, and hopefully she will contribute into, I think, the most important thing for the European regulatory environment. And you have to say they did a very good job on getting the financial system out of the crisis. But for the moment, I think they're overdoing it quite a bit. They have to turn pragmatic. They have to be really careful. The European financial system is a lot more important for Europe than the US financial system is for the US. So they got to be very careful with it and make sure that banks can really fulfill a useful function in order to help Europe grow. And there's a point where regulation turns not into creating stability, but because of too much regulation also creates instability. So the most important thing for her would be to make sure to say, no, we got a level playing field now, that's where we are, and we're going to stay like that now for 10 years. No more changes. Don't change the rules every 6 months. Keep it like, if she does that, I'm going to love her.